Today's episode, we're talking with Jake from State Farm, Jake Davis, and he's going to be talking about insurance and then also touching on some of his experience as a real estate investor.
And what's really important, guys, is this was a young combat-armed soldier, spent about 3 years in, and all of a sudden came into a sales environment where he started to dominate. And he talks about all the little things about how to save money with insurance. What's more important? Is it the deductible or the premium, and how all of those things kind of play a factor? So stay tuned.
What's going on, guys? This is Dan Wynn.
And Mike Glaspie.
And welcome to the Military Cashflow. Hey, today we got a very special guest, like a good neighbor. State Farm is there. So we have Jake from State Farm with us. His name is Jake Davis. And he's going to be talking about his experience with real estate, also as an insurance salesman as well. So Jake, thank you for coming on. Really, really appreciate you. Would you mind telling us a little bit about yourself, who you are and what you do?
Yeah, man. Appreciate it, Dan. Thanks, Mike, for inviting me onto the podcast. So I am a State Farm agent aspirant here in Fayetteville, North Carolina. I started the company August 1st of 2019. Rolled right into it after the military. I was a Calf Scout, joined the military in 2016. Went into the 82nd Airborne Unit. Never got to deploy. Ended up having some medical issues throughout my Army career. And I ended up just getting medically separated in 2019. And I transitioned right out of the military, looking for a job. I had a couple of things lined up, but really didn't know what was going to be the next career path for me. Ventured into doing some gym sales a little bit. Didn't really work out. I was really wondering how I'm going to feed my family. What am I going to do about mortgage? Because that's got to be paid still. But the whole insurance thing kind of just fell on my lap. And, it's been a great opportunity since I've had that now, and really blessed to have the opportunity to keep going with State Farm and looking forward to what the next 20, 30 years got to offer for me.
So what was it about insurance, or what was it about State Farm that really attracted you? Because you said, you got out, and it sounds like, I'm not sure if that was planned. Well, it doesn't sound like it was planned for you to get out, or you knew what time it was that you were going to get out. But what was it that kind of pushed you in that direction towards State Farm after trying a couple things and actually getting out of the military?
Really the job security. I had a friend of mine who was in State Farm, and he actually introduced me to Charles, the agent where I work for now. And he said, man, this is a great opportunity for you. It's done me very well. So I listened, went and got licensed. It was a 2-week school. Had to get licensed in property, casualty, life, and health. And, I met Charles, really seeing the kind of lifestyle that he lived, the financial freedom that he has now. And I was like, man, yeah, I definitely can see myself doing something like that. And, at first, with any type of sales job, you don't really know what it's going to, entail, especially in the winter months too, getting close to Christmas and stuff, people's not really buying things. And so, I had my doubts and, wondering, if this is what I really want to do. And, you got to break through that threshold, just keep, your clientele, your leads going, follow-ups too. The follow-ups are huge. So once I started getting the ball rolling on my snowball, that's when I'm like, okay, yeah, this is it. You got to keep it. What I like to say is kind of like a diesel engine. You always got to keep that diesel engine going. And then once, sales are coming through, I really just, looked up and, saw the light. I was like, man, this is something that I really could do for a while now. And I love it.
It's funny you said that. You said that you're looking, or you found job security through sales. That's an oxymoron just across the board, right? Because a lot of people in sales is you have to kill what you eat. But I love the fact that for you, with that, once you shifted your mentality, it truly is job security, right? Because now you know your potential.
Yeah, you really, the ball's in your court in sales. It's, if you're not having a good month, or if you're not eating, or if, obviously you're going to eat, but, if you're not doing stuff to put the food on the table for your family, you got to look in the mirror. It's no one else's fault but yours. So you got to have that mentality of the go-getter. And, during this whole time of the pandemic right now, a lot of people are, it's sad. People are wondering, where their next paycheck's coming from. But, sometimes you just got to go get it and, put put the pedal down to the floor, really.
Yeah, man, you got to go out and get after it, man. That's pretty much what it's all about. So I'd love to talk about a couple things. One, obviously you are also an investor, right? And then you do sell the insurance as well. So I'm sure you can talk a lot about the rental insurance as well as other types of insurance that would affect military members. So I'd like to touch on both of those. But let's start with the insurance piece first. All right. So what are some things that maybe we have a lot of like first time investors, or even like, people with just one or two deals, right? And they're executing these deals and they're just like, hey man, I'm just going to find some kind of rental insurance. It doesn't really matter what it is. I just got to find something just because it satisfies my lender. I have to have something, right? What would you say to that person? Like, what are some things that could possibly help them in their journey in finding a good rental insurance?
Yeah. Real estate tips.
So what's that? Go ahead, Mike.
No, just saying, drop some of them real estate tips.
Yeah, man. Absolutely. So, there's different types of fire insurance when it comes to property. So, you got your HO3s, which are going to be your home buyers. And then you have your renter insurance for people people who's renting properties, like such as, tenants, people who are moving into apartments, rental properties. My biggest thing I could suggest for people who are buying property and, this is their first house, they're moving into it. Let's say it's a military couple. Go ahead and get on top of the homeowner's insurance, because you don't want to wait on the homeowner's insurance to get it at the last minute. That way you don't have to hold up the closing costs, not the closing costs, but the closing date. So you don't ever want to, get the homeowner's insurance, let's say 4 or 5 days before your closing date is, because now you've got your brokers, all worried out, worried, and your real estate agents, all worried because, they're like, well, hey, where's the insurance guy? What if it's a Saturday? What if it's a Memorial Day weekend? No one's at the office. So make sure you get on top of that. Stay on top of that. Really make sure you get it done pretty quick. And two, like on the coverage of the top of the house, what they're going to do for like State Farm, we put it into what they call an ERC tool. And so pretty much it's a system that has, it pulls all the comps of it, the top of the house it is. We don't really have to do too much manual work in it unless the house has been flipped, and it doesn't automatically pre-populate. So that coverage on the dwelling will be sometimes, substantially, a lot more than what the house is worth. But that's kind of good too, that gives the insurance company room to work, let's say, in case of a loss. So that's good. But make sure you always have adequate coverage, that your personal property coverage, which is going to be things that you own, such as like your, clothes. The analogy I always give is like, take the roof off of your house, flip it upside down, everything that falls out of the house, you want to make sure you have enough money from the insurance companies to pay out. So always make sure your personal property coverage is met to how much personal property you need. So
let's break some of that down, man, because you went in pretty deep, pretty quick. So check this out. The homeowner's insurance quote, you said get that ASAP. How long does it generally take somebody shopping for insurance coverage to get a decent quote?
15, 20 minutes.
15, 20 minutes.
Yeah.
Okay.
So as soon as the customer calls me, we got to take their information. And the state of North Carolina, if you're married, you legally have to list the spouse's information on the homeowner's insurance. And same goes with auto insurance. You have to list them on there. So, if the customer can already have that, right in front of them, they just transition it over to the agent or the sales team member who's going to be quoting it, and they'll get right into it, and they pretty much just plug and play. That's it. And it's real simple. It takes 10, 15, 20 minutes to get done, really.
But then you guys got to come out and actually get the policy. To get the full policy, it takes a lot longer, correct? I mean, you got to come out to the house, verify everything's there,
Correct. There'll be an underwriter. So we'll submit it to our underwriter. They'll take a look at it, and what they'll have is like somebody come out there to appraise the house, pretty much, an adjuster.
And how long does that take to actually get the policy issued?
Depends on the property. If there was issues on the house that needed to be fixed, we'll get an email from the underwriter saying, hey, there's a couple of issues on the house. Let's get this fixed. And then we can submit the accurate data up to the underwriters and show them they got it fixed, and then boom. But most of the time, policies can get issued within like a week or so, really.
Okay.
Yeah.
And so that's huge because, like you mentioned, timeliness, right? So many people come into a real estate property and they try to calculate their numbers, primarily their debt obligation or their pity payment. One of the I's in the pity, you got your principal, interest, taxes, and insurance.
Yep.
A lot of times, if they don't get these quotes, if they don't get the policies issued, then they have no idea what the insurance premium is actually going to be. So you guys heard it. Jake from State Farm, Insurance 101, quickly just said, yo, get the quote ASAP. It takes you 15, 20 minutes and start that policy process. So one, the numbers. Second part is the timeliness. This is, we're now recording this on a holiday weekend. Now, Jake doesn't rest for nobody, but your average insurance provider might, right? And they may not be available. So if you close literally, this is a Friday, if you were to close Monday, and you haven't started that policy, now you've just delayed closing. And guess who's mad?
Everybody.
But the sellers are mad, the providers, the lenders, the brokers. So that is huge. Okay.
Yeah.
Now I want to dig into that type of coverage. You mentioned that you want at least adequate coverage to cover it. You covered a couple different parts. Sorry. The first one, you said an ERC calculator. What is that? What goes into that to kind of pop out a number?
Yeah. So what it is it's some kind of system that our company uses where we just pretty much, type in the address and it automatically pre-populates what type of house it is. And then you can kind of choose too, like let's say if it's an economy house, a standard house, a custom house, or like a well above average house, you kind of get to pick and choose which type of house it is. And then you'll go by from, bedrooms, the hardwood floors, tile floors, laminate floors, 2-car garage, 1-car garage. You kind of just plug and play what the house is. Now, what I like to do to make the process easier, I go straight to Zillow, Realtor.com, look at those type of websites, and I'll go ahead and see like, okay, that house has a metal roof, or that house has a 3 composite shingle tile roof, So I'll go in there and I'll determine what it looks like for me if the ERC tool doesn't pre-populate. Now, sometimes it's not always accurate. That's why it's important, to talk to the buyers of the house and sometimes reach out to the home inspectors of the house who's done it on the property. But normally, that tool is pretty accurate some of the times. So you just it's all plug and play really, determine on the type of property it is.
That's good stuff. Go ahead, Dan.
Yeah.
So we talk pity, right? Principal, interest, taxes, and insurance. That's the main factors that basically the big rock that you're going to be paying out as far as your expenses, right? And then the insurance is the piece, or is the piece that we're talking about with you. So knowing that, I want my expenses to be as low as possible. Therefore, I want my insurance to be as low as possible. What would you say to those that are out there shopping just to get the cheapest insurance, period? And what does that really mean for me, just having cheap insurance?
Cheap isn't always the best. I always I really, have to drive that nail on the head right there because, obviously everybody wants to, pay the lowest price, but sometimes the lowest price isn't always better. And it, come to things, such as buying a house, that's a big asset is your home. You don't want the cheapest stuff that's going to be covering one of your assets. So same thing, you have with like your rental properties that you own or other assets that you have. You don't want that big of a risk on those assets, really. So whenever you're digging into the insurance on the property and the cost of it, sometimes, you want to go get the lowest price, but really sometimes it doesn't. The price is going to affect what I'm trying to say is that the coverage of the house is going to affect the price. So, if you buy a house for $250,000, $150,000, obviously that price of that property is going to be a lot different than the one of the $250,000. So, but go ahead.
So Jake, my house is $100,000. My rental property is $100,000. Why do I need a rental policy that says $250,000 that says it covers $250,000? What's the purpose of that? I have a $100,000 house, right? It only costs $100,000 to rebuild, right? So what's the purpose of having a $250,000 policy for a $100,000 house?
The risk. So you got someone renting it out, right?
Yeah.
Okay. The liability.
Right.
It's all about the protection of you, and then also the protection of your tenant as well. So that's your property that you own, and you have someone else living in it. Now, you're not only responsible for that house, but you're also responsible for that tenant living in there. So you want to make sure you have that adequate coverage on that property. That way you transfer all that risk over to the insurance company. That
Correct.
way, you don't get into, let's say, a sticky situation where you didn't have good coverage. Something terrible happened on the property, you get sued, and you don't have a lot of, business liability insurance on that property. So now that you're sitting up, around 200,000, 300,000 of coverage, you don't have to worry about that. You can sleep at night now. So it's always good to have that coverage.
I love that you explain that, because like my very first property was about $100,000, right? My very first rental property, and I had a $250,000 coverage, and I was like, bro,
yeah.
Well, my insurance person had to actually explain that to me exactly how you did. So if you're listening out there, definitely take heed and just rewind that if you need to understand why your policy covers so much more than what your home is actually worth. So.
And there's a lot of times where people will talk about an LLC versus an insurance policy. Ultimately, like Jake just said, it's about protecting yourself from being sued, from being, whatever the case may be. So, a person can only sue you for so much depending on certain things. So if your insurance policy was to cover it, that could be a great substitute for an LLC, right? It's just a conversation starter, because a lot of people have those doubts or those comparisons. But ultimately it's about your protection.
Correct. Yeah, correct. Now I want to touch on the, I was telling you, you got your different types of fire coverage for your either homeowners or your renters. Now let's move to the renter side of things now. And this is going to be most of our listeners here are probably military, right? Hence military cash flow. So, a lot of, the soldiers, they rent, they pick up PCS rent properties. So now if you want to get on the cheap side of things, they have to have is renter's insurance. You can pick up a rental policy probably for, I don't know, I've seen it as low as $5 to as high as $25, really. It just depends on how much personal property coverage you need. And they also have liability as well on their policy too, because they're renting from somebody else. So now they got to be protected and covered on their side of things. But
is that liability for them, for the rentor, for the tenant, or is that liability for the landlord in the renter's position? Does that make sense?
The renter's position, correct. Mm-hmm.
Okay, nice.
Yeah. Mm-hmm.
Nice. So I wanted to ask you, when we're talking about different things that can kind of affect insurance quotes or insurance premiums, how much does like the type of roof, the type of foundation, the type of siding, the type of interior renovations, how much do those play when it comes in?
Oh, they play a lot. So metal roofs, obviously, they're going to be more expensive to replace than shingle roofs. Brick houses, they're obviously, brick veneer, they really, insurance companies look at them, I believe, as more safe because they're not as prone to fire, if that makes sense. So it might be a little bit cheaper for a house that has brick, it's going to be cheaper for a house that has good security systems because they can offer discounts for smoke detectors, fire alarms, things in that nature as well. And there's one of the questions that ask us on the quote tool is if a house has a sprinkler system. Now, what houses have sprinkler systems? Not many, but when it gets into the commercial side of things, boom, there you go. So that's going to be a big key factor of price with having those in there. So
yeah, one thing I really want to hit on, guys, is because that's actually very interesting about the metal roofs. There's so many investors that want a metal roof. Why? Because their CapEx, their capital expenditure allocation, can be greatly reduced because the metal roof lasts forever. Yep. But if you guys listen, Jake just mentioned that the premium will be higher because it's more expensive to replace. So if you guys are not taking that time to get that quote and being accurate with the actual quality of, whatever the construction material is, your cash flow can be affected in a way that you may or may not consider positive. So always keep that in mind. That was actually really good that you brought that up. Brick veneer security system, some of those things that we're familiar with, but the metal roof, a lot of people will overlook that.
Yeah. And two, also like having other structures on the property, like sheds, detached garages too. If you have those, you definitely want to make sure you have adequate coverage on those as well, because that falls under the category of your homeowner's insurance as well.
Yeah. Excellent. Hey, so all right, so we talked a lot about the homeowners insurance, right? Because a lot of everybody's listening, either is an aspiring investor or is an investor, right? As far as real estate. What about other types of insurance that might affect other soldiers? Because obviously this is a military platform, and we do have 99.9% of our listeners are military. So are there any other types of insurance that are any other tips that you can give for our military members out there listening, that might help them out in regards to other types of insurance?
Yeah, absolutely. So we could target on the auto first, of course. What I would suggest for any newcomer soldier who's fresh into the unit, in the Army, not much life experience, shop around for some auto insurance. Absolutely. Don't just go with the first one that somebody throws at you like a team leader would or something. Make sure you shop around. It's something that's going to be affordable in your budget. And same with like going like buying a car too. Make sure you go to the chain of command, talk to your squad leader, say, hey, I'm looking to buy a car. What kind of car do I need to get? Don't go out and buy that 2020 Camaro that's going to be, sorry to all my dealerships that I work out there.
That's blasphemy. That's blasphemy to all those privates out there.
Yeah, it is. But yeah, just be wary though, because they're trying to get a sale. Everybody's trying to get a sale, but be wary of that, because when you get a car, got to get insurance. So be wary of that. And insurance on those new vehicles, Chargers, are going to be pretty up there. If you especially haven't been driving for a couple of years now and not much driving experience, it's going to be up there in the price range. So always make sure that you definitely, shop around. And two, like the deductibles too, don't go get $1,000 deductible. And I saw you point, Mike, you were about to talk about deductibles on the homeowner's insurance because we missed it.
Yeah.
But on the auto side of things, you definitely do not want, $1,000 deductible on a vehicle. You just don't want it, man. It's ridiculous.
So I got to say for I know this is, insurance 101, but for those cars, guys, I literally had a junior enlisted come up to me and said, hey, I got a great deal on a car. I'm only paying 16%. Whoa! I said, bro,
what does it even mean?
Sank. I was like, a good deal. So please, guys, go out and, no shade on that individual, but please educate yourselves, guys. Shop around for better rates. Shop around for a better insurance program. But we got to touch on it, man, while it's still hot. Deductibles. Talk to us about deductibles, man. Just what is it? Just so for people who don't know, and then what are some things to consider when choosing deductibles?
Okay, on the homeowners or the
homeowners.
Okay, so deductible depends on each company. So I know with the State Farm, if you have your autos with State Farm, you get to have a lower deductible than someone who doesn't have their auto. It's kind of like the perks of just being with faithful to a company. But I suggest on the deductibles things on the homeowners. If you can, if you have your auto, it'd be $1,000 deductible. That's the lowest you can go on the homeowners. But what the deductible is if you ever have a loss on the house and you go file a claim, that's the number that you have to pay to the insurance company before any work gets done to replace or fix the property that was damaged. And two, also, now that it's on my mind as well, when filing claims on a home, if you can, I always like to, tell my customers, if you can fix it out of pocket, because you don't want to file so many claims on a home, because an insurance company will drop coverage on you if there's so many claims that's been filed on that house. Now, let's say if it was North Carolina is very prone to hurricanes. So hurricanes come through, shingles are falling off the roof. Don't be afraid to file a claim on something that a storm damage has happened on it, because they will waive that and see that it was an actual hurricane or catastrophic related type of incident. So be wary of those type of things as well whenever you go file a claim.
And I'm glad you touched on that really quick, because actually, so I live at Fort Stewart, and I've lived here before. and hurricanes come through here pretty often, right?
Mm-hmm.
And a couple of times it came through like every single year, two times a year or something like that, pretty much evacuated Fort Stewart for, larger hurricanes. And I filed for this like food spoilage thing, right? I'm sure you're probably familiar with it. They pretty much told us, and like everyone in the military talked about it, at least at Fort Stewart. Hey, file for the food spoilage thing. Your food's been sitting in the refrigerator. All that food's bad. You turned all your power off, all that stuff. So it's like $500. I filed for that for like 2 times. And what I didn't know, you talked about filing claims several times, is that when I went to buy another 4-unit, I actually bought a 4-unit with a VA loan. They saw all that, and it gave me issues. So I had to go through a different insurance company because USAA is who I was using. They were like, well, you filed too many claims on your last home, but it was just food spoilage. So what's up with that?
Yeah, man. So what it is there can only be so many claims filed within, I believe it's 2 years. And if you have more than so many claims during that 2-year span, some insurance companies might not offer you coverage, or if you've already got coverage with that company and it's part of their, rules, or they'll drop you. So like I mentioned, if you can, if something for like food spoilage, just go to the grocery store and replace it. If it's not worth losing the homeowner's coverage over, or go through the headache of having to shop around to get more if it's over something minute as something like that. Now,
that's great information. No one told us. No one told us that. That was just a thing that everyone kept saying around posts, like, hey, food spoilage.
I got 2 questions. So you said so many claims on one house. What happens if you have a nice portfolio now and you place a claim on each of those houses in the span of 2 years? Same thing?
Oh, I might have to find out for that one for you. But okay, I want to say, I'll have to get back with you on that.
We find loopholes, military cash flow. No, I'm playing.
Yes. Yeah, no, seriously. But I wouldn't want to give you something that I wouldn't know the answer to. But I feel like it would follow the house, if that makes sense.
Yes.
Because I do know that whenever I own a rental property myself, and whenever I go and see the LHR, which is like the loss history report, I can see everything that was filed on that house from the previous people who lived there before, and also the tenant who lives there now. Like if she were to file a claim, I can see all that follows that house. So it might just follow that property. So
okay,
that's something that I'd have to check into as well.
How far back does that history report go? Just generally?
I want to say. How long does it count for? Like, let's say the loss would count.
Yeah, is it the
3 years?
3 years. Mm-hmm. Okay. And then the second question I had was, you said that $1,000 was the lowest deductible you could get. What is the highest deductible one could get?
That's through State Farm, is $1,000 deductible. I'm not sure if there's other companies that have lower deductibles than that.
Well, what's the average range then?
1,000, 2,000, 2,500, 3,000, but I've never seen anything over $3,000.
And so on that note of deductibles, I know we've mentioned this before on Military Cashflow, but a lot of a big question, I guess, for investors is, how much should my reserves be? How much should I have in reserves? How much should I allocate to CapEx and this, that, and the third? And one of the general rules of thumbs that I love to do is base it off of my deductible. So understanding that if the big, large CapEx item did fail, the roof, the HVAC, whatever the policy actually covers, yes, it may cost $7,000 to do it myself out of pocket, but if my deductible is $2,500, then I've just paid a third of the cost and got the problem fixed, right?
Yep.
So that's a situation where I like to choose personally the highest deductible. And if I can do it for less than $2,500, I do it out of my reserves. I don't file the claim. And then if it is a big ticket item, that's where I can sit back and consider the deductible. But Correct. Just something to consider for all the listeners out there.
Yeah, too. And because like if you think about it over a span of time, and if you do the math on something, the more claims you file on insurance, either it's auto, home, that's eventually going to raise your premium up. So if you can fix it under your deductible, if you can fix it before that filing a claim using your deductible, I would, because you might end up saving money at the long end, because you now have an insurance premium that's for either a home, a homeowner's insurance or for 12 months, your autos are 6 months. So if you can get that, fixed, that issue fixed on your own dime, I would, because you might end up paying more on the premium for the 6 months or the 12 months over, than you would actually paying on it with a deductible. So food for thought.
Definitely.
Love it. Yeah.
Hey, so we talked a lot about, insurance 101, covered a lot of the insurance, pure insurance piece. So let's talk about some of the real estate there. So we know you're an investor, right? Let's talk about that first deal. Let's talk about the first deal, one, and then two, maybe your views from it as now being an insurance agent, if that changed anything about your thought process when it comes to investing in the future as well.
Yeah, definitely, Dan. So, I bought my house, wasn't even what the reason why I bought my first property was because me and my wife, Cassidy, we were sitting there talking over dinner one night, and we was like, man, let's see how much money we have spent renting for the last 2 years. Bro, we did the math on that, and it was like, man, we just made somebody else so much richer. Why are we not, utilizing our VA benefits and going to buy a property now, turning around, a year from now, renting it out, and then keep doing that. So that's what we did. The first house, bought a single family, 3-bed, 2-bath house, somewhere around our mortgage, I think, $200-$300 cash flow on, one property, becomes, $200-$300 cash flow on another property as I keep using my VA loan down the line. So that's what we did. We bought that one November of 2018. Then we moved out of it in 2019 and bought the house that we're in now. And we're going to do that probably again in the next couple of years. So, but now knowing I know what being in the insurance, what I would look for into buying properties now is location. Definitely location, 100%. And now the type of house that we talked about, is it going to be brick? Is it going to be panel? Type of roof it's going to be, also the year that it was built, all that good stuff right there. So
two things I want to hit on that I absolutely love that you did, and definitely take note of what he said there. So he said he essentially did deliberate planning. He knew that he wasn't going to live there forever, so he bought a decent, stable starter home that he knew he could rent out in cash flow. So I assume that you did some due diligence. You saw what the rent was like in that area and what you could possibly cash flow from it once you moved out. Is that correct?
Correct. Yeah. Mm-hmm.
Excellent. Now, a lot of people don't do that. I love the fact that you did that. And if you're listening, I see a lot of people kind of buy outside of their means. This is their first home, especially when they're military, man. Like, you're going to PCS in 3 years, dude. You're going to be leaving in like 3 years. If this is not going to be your final home, why would you extend yourself, beyond your, beyond living below your means, essentially? Why would you not, live a little bit below your means? Make sure you do your due diligence, especially if you want to turn it into a rental property. Make sure you do your due diligence. Make sure it can rent out for a price that you can actually cash flow, meaning your pity that we talked about, plus any other vacancies, plus, property management, plus HOA fees if you have them, and subtract that from your cash flow, and there should still be a positive there, So yeah. I love that you did that. Kudos to you.
Yeah. It was awesome, man. Yeah. And when we bought the house that we're in now, we had to get our house up on the market for rent like ASAP, in order to buy this house and get approved for it. So we listed the house for rent for a good price. But within, the first week of having it on the market, we had like 60 inquiries of people wanting to rent the property out. But what we did was, we had to hurry up and, get somebody in the property ASAP. We just went with like the first 2 or 3 people who made an offer on the interest of the house. So, we listed it for rent for $1,050. And the inquiries that I got from that house, I know that I could have at least rented it out for $1,200-$1,300 at least now. Now I'm like, man, I wish now I definitely know going into doing this house whenever we rent it out is definitely just wait on it, because somebody out there will pay the price that you want to put the house for rent. But you don't want to rent the house out for more than what it's worth. but also too is, definitely want to wait this time and actually get a little bit more than what I did. Yeah, absolutely.
One of the things, as you guys are coming out and you're purchasing these nice starter homes, right? For those looking to looking to get into investing with that VA loan, just always remember that this is one of the biggest objections I always get. Well, what happens if the market dips, right? Or they try to evaluate all the numbers for what they can sell it for, in 3 years, and they're running the numbers today, right? Well, yes, the market goes up and down, but your pity payment when you use a VA loan, it's fixed. It's fixed. Now, yeah, the insurance premium can flux here or there, but for the most part, your mortgage and your principal and interest is fixed. So that is going to stay the same for 30 years. So when you look at the rent, right? So now Jake knows, hey, it's going to rent, this area rents out for $1,000 and my mortgage payment is $600, just for an example. Well, rents typically go up. They rarely go down, but that mortgage payment is fixed. And that's what you have to look at when you're looking at using your VA loan to get these properties and ultimately do them, slowly over and over as you're growing and just keep building that portfolio.
Yeah, exactly. Yeah.
That's absolutely perfect. And I love just talking about those numbers. I mean, you pretty much said your mortgage is about what, $650. You said you're renting it for $1,050. Are you using a property manager right now?
My wife. I'm handling the fixes myself, but my wife is managing the finance parts of it and everything. So
you save on costs right there. So no property management. I'm assuming you probably set a little bit aside for your repair, like monthly repairs or something like that.
Yep.
I assume you set a little bit aside maybe for vacancy, right? So I mean, just looking at the numbers without really digging into it, I'm sure your cash flow at least $250 a month. At least $250 a month based off of what you're saying right now. And that's undervalued because he's saying he's renting out for $1,050. I'm not sure how long that tenant has been in place, but you could easily every year, once that tenant, if it's a good tenant, if it's a solid tenant that you really like and they want to be there long term, you can easily increase rent in $25, $50 increment, increasing your ROI, increasing your cash flow over time, and while still maintaining a great tenant and increasing your cash flow as well. So that's awesome. And that is how you do it, dude. That's textbook. I wish that everyone could hear that story and exactly how you did that and apply that to them going out and buying a home. Because too often do I see people, like I said, people will buy to the extent of their means. They'll buy a $300,000 house for a place that they're living at for 1 year, just to essentially keep up with the Joneses, in my opinion.
Yeah.
For that IG pick, you know what I mean? And then when it's time to PCS, they're looking like, oh shit, man, like I bought this with 0% down. I was over leveraged because, I rolled in my fees into the loan. So the home's worth $300,000, but my mortgage is for $320,000 because they rolled those extra fees into their mortgage. So the place, I can only rent this place for $2,000, right? But my mortgage is, or I can only rent the place for $1,500, but my mortgage is damn near $2,000. So they're taking a hit every single month. That's not the way you invest, guys. That's not the way you invest. Do your due diligence on the front end, just like Jake did, and make sure you're buying an asset, not a liability that you're paying out of your pocket every single month.
Absolutely. And that's something that I wish I would have done too, is I wish I would have started this earlier in my military career. I didn't get to do too much. I only did 3.5 years. I got medically separated, like I said. Some unfortunate events happened, but I wish I would have started that as soon as I got in. I wish I would have took advantage of it, right then and there. I'm only 25 now, but I wish I would have started it when I was 21, 22 years old,
So that actually brings up a good point, man. You were a 19 Delta Cav Scout.
If you ain't Cav, you ain't shit.
Right? My man.
So how in the hell, what did you learn as a junior enlisted Cav Scout that made you so successful at insurance sales and savvy with real estate investing? What did the military contribute to that?
Leadership skills, the go-getter attitude. With that type of job, nothing transfers out into the civilian world, that you're going to find a job at. But you just have to be a people person. You got to learn how to add value to other people first. And what I learned in my time in the service is, is being humble and being a team player. And if I'm not helping out somebody on the team, then I'm not getting any value into my life. And so that's what I really, transferred out of the military is, just you gotta put yourself second. You got to put other people first. And when you do that, things start, really falling into place.
Love it, man.
It's phenomenal. Add value, man. Add value. And I love you touched on the leadership skills. A lot of people think that there's absolutely no transferable skills from the military, especially from combat arms. But like I would disagree. Just like Jake says, those leadership skills, those are transferable throughout whatever field you get into. And that go-getter attitude, that confidence that you instill in yourself, that you have in yourself, that you, in my opinion, I've got a lot of confidence from being combat arms as well, being able to talk to people, being able to be a team player, being able to help delegate tasks and things like that. Those you don't learn that in a lot of other fields, especially as young as you learned them, So that's awesome. That's
you
great.
Always find a way, because things don't always go your way in combat arms, in training and downrange, and problems that happen. And you always got to find a way to fix the problem. Always got to find a solution, because there's always going to be a solution to everything. You really got to step back and think of how, assess the problem and then find the solution, because you'll always find the solution if you really sit down and focus.
There's never a no. There's only a
right.
How can I?
That's right.
You gotta live by that. I love it, man.
Can you say that again, Mike?
There's never a no. There's only a how can I. That's it. Or how can we? How can? Because there's always a solution. I love it.
Excellent. Hey, so hey man, that's you cover on a lot of topics. What's next for you?
What's next for me is, I'm going to be in Fayetteville, North Carolina for, I want to say another 2 to 3 years. I'm originally from Alabama. My wife's from St. Louis, Missouri. We eventually want to get back to Alabama. So I'm in what they call Agent Aspirant program now. I just started that with the office. So now I got to stay a team member, for another 18 months, I think, really prove my grind and the hustle. So then once I finish that, I'll go into school for 17 weeks of agency school, and then I'll become a TICA. And once I become a TICA, that's 1 year of having your name on an office. And then if you meet the numbers and the requirements that you have as a TICA, then you get your contract. So hopefully in the next 2 or 3 years, I'll be back in Alabama somewhere. That's my plan, really, is being a State Farm agent there. But between the meantime of that, I might buy another property or two to flip, sell it, get enough capital to meet, to go buy an office, because, you got to have some money to go do some of that stuff. So that's probably what's next, is trying to find the next property to buy and get a little cash from it.
Damn, 23-year-old Cav Scout buying houses, man, buying rental properties. You said you bought it when you were like 23, right?
Yep, I was 23. Mm-hmm.
23-year-old Cav Scouts out here doing it. You know what I mean? Like, that's awesome. I mean, 25, I'm gonna buy a couple more houses, dude. That's freaking phenomenal. I love that story.
And I feel like I'm behind too, man. Like that's the thing, is I feel like I'm behind. Yeah,
bro. It's so funny because so many people say that. I mean, I know me and Dan feel like we're behind, right? But ultimately, if you always try to compare yourself to the outside world, you'll always feel behind. You are absolutely crushing it. And for anybody else out there that's afraid to get started, but they're still reading books, you guys are absolutely crushing it. You guys are light years ahead, and you just have to keep going step by step, because I guarantee you, 4 years from now, 5 years from now, when we're smoking a stogie, sipping on some of that good whiskey you got over there, we're going to be like, man, look where we came from. Remember when we were out hiking with 40 or 80 pounds on our back in the rain, sleeping under a poncho? Now look at us, right?
Yeah.
So I definitely understand where you're coming from, man, but you were doing very well.
Yeah. I know we're probably getting close to time here, but one thing that I do want to touch on, I'm not going to touch on it, but Mike knows this. We definitely got to touch on it sometime in the future, and actual cash value life insurance policies.
Yeah.
That's something that's another podcast episode in the future.
Yeah, we might bring you back on for that one. And we're going to leave that alone right there. That's our teaser clip. Y'all have to stay tuned. Y'all have to subscribe. Y'all have to like. Y'all have to follow, y'all have to share this podcast, and y'all have to leave a comment below if y'all want to hear how whole life insurance policy, cash value life insurance policies can actually help you accelerate your real estate portfolio. Ooh, that's a good one. I got me tingling.
Excellent. That's a perfect segue, man. So, hey, if you could give some advice to any other service member out there that's wanting to invest in real estate, right? What would that one piece of advice be?
Get a mentor.
Get a mentor.
100%. Get a mentor. Find somebody who has a couple properties. Find somebody who, is willing to show you the ropes, someone who's not going to, be afraid to show you those things that they failed on and that they wish they would have done. But really, find someone who has, who's done it, who's been there and got the t-shirt. Really, that's, I've talked to Mike several times, but I bought my first property before I knew Mike. But I wish whenever I had bought my first property, I wish that I would have found somebody like Mike or like somebody like you yourself, or in the position that I'm in now, someone like me. I really wish I would have, reached out and said, hey, I want to buy a home. What should I do? But yeah, never be afraid to ask questions, and always, ask for help if you need some. So that's that'd be my advice to somebody who's going to go buy property, is ask questions.
Crazy you say that, because today this video is not going to air for a couple months, but today we just dropped how to find a mentor. That was the video that we put up.
You guys go to the YouTube channel and check out how to find a mentor. Very short and sweet, 10-minute clip. We'll go over, our struggles of finding a mentor and some of our tips and tricks. We're doing exactly our tips and tricks. I don't know why I say tips and tricks, but anyway, tips and tricks that Jake just talked about his number one tip for success.
Okay. So what are you doing to find a mentor? I'm curious. What are you doing to find a mentor, or do you already have a mentor? Or what did you do to find that mentor?
So no kidding, I actually reached out to Mike one time. I said, hey man, you mind mentoring me a little bit? And that's really what I did, is I sent him a text message, and he said, yeah, I'd love to. We met at Coffee Buzz, and yeah, sorry, Mike, I haven't been on my game, getting back with you a lot. But what I can tell somebody who has a mentor or you're getting one, stay in front of them, and that's one thing that I didn't do to Mike as much. But really, just don't be afraid to ask. That's the one thing, is, just if you really need to ask if you don't know something. So
excellent advice. Thank you very much. Hey, so Jake from State Farm, Insurance 101, how can our listeners get in contact with you?
Yeah, so you can find me on social media. I'm on Instagram, and it's Jake _ State Farm 004. And I'm on Facebook. It's just Jake Davis. I've got I've got a business card out too. If you want to reach out to Mike, or Mike's got my cell phone number. I'm not going to post my cell phone number on a podcast. All you crazy people out there calling me at 3 a.m. asking me what I'm wearing. So yeah, don't call me at 3 a.m. and ask me if I'm wearing khakis. So, but yeah.
Hey, so all his links below, all his links will be below. So make sure you check out the show notes. We'll have all his tags and everything out there, so you guys can get in contact with Jake and get some information from him about the Insurance 101 deal. So with that, Mike already hit it. Hey, if you're watching this on YouTube, make sure you hit the like, subscribe, hit that notification bell so you can get more dope ass content. Follow us on the social media sites, and then if you're listening to this on podcasts, and please leave us a 5-star review. Lastly, we do have the Military Cashflow Facebook group, where we have damn near 600 people now. I think maybe over 600 people now. 600 service members that are actually investing, right? Aspiring and actual investors. A lot of great stuff going on in the group. So please check us out there. Leave us, join the group and add value, right? Just like Jake is talking about, right? You can find mentors there as well, because everyone there is about helping each other build wealth and create cash flow. So that's great. Mike,
Yep. And as always, guys, if you are looking for a real estate investing savvy agent in your area, let us know. We have partnered up with a lot of agents that we have already pre-vetted, and we will connect you with them in your local area, all free to you. So let us know. Reach out to us. You can reach out to us on the Facebook page. You have all of our social media. Let us know how we can help so you can get started making that military cash flow.
Hey, Jake, really, really appreciate you coming on. Thank you so much. Appreciate your time. Appreciate the knowledge that you dropped out to everybody. So thank you very much.
Yeah, man, I enjoyed it. Thanks again for having me, guys. This has been awesome. I've always wanted to do a podcast, and I finally got my dream. So I can go to sleep now, and I enjoyed it, man. Thanks for having me. I really had a good time.
Dope. Okay. All right. With that, this is Dan Wynn.
Mike Glaspie
signing off.